It's Alembic Pharma's, quarterly update that we'd like to take note of. The company's seen its net profit and EBITDA surge on a year-on-year basis. Margins are now stand at 14.5% versus 13%. But the reason perhaps why the stock is down 1.5% is because the top-line growth has been missing for the company. This quarter, the revenue growth is at 3.3%. And for the last 4 or 5 quarters, we've seen a single-digit kind of a revenue growth for Alembic Pharma. But at 3.3%, this is the lowest in terms of a growth rate, at least in the recent past. Pranav Amin, Managing Director at Alembic Pharma, is now with us on the show. Pranav, thank you very much for joining in. Let's talk first about your domestic business, and then we'll get to the international US business, etc. Now, in the domestic business, the animal health, which is a smaller portion, has done well, 20% kind of a revenue growth. But acute and specialty has been a bit subdued. Tell us what went wrong, and is there a recovery in store?
Hi, good morning. So the India business was a mixed bag. There were some sectors within the segments within the India business that did really well. The ones that did well for us were some of the specialty ones that we've been focusing on, such as gynecology, ophthalmology, diabetes, cardiology. So those have grown pretty well. In terms of animal health, that has been going gangbusters for us over the last 15 odd quarters. That's still picking up a lot of momentum, and we're spending a lot more on that in terms of new launches and new products. So that's looking quite good for us, and I expect that to continue growing. Acute was a little slower. I think for some odd reason, we couldn't pick up the ramp up in the acute. The market itself was much slower on acute. Hopefully that will recover as we go along. So let's see how that goes.
So are we expecting second half to be better than the first half, Pranav? What is the outlook now for the domestic business?
So actually, in terms of the outlook, I would rather give an outlook for the entire company. And I think the second half should be much stronger due to a variety of reasons. So if you see the international generics, right, the rest of the world generics, Q1 was rather subdued. Q2, we went back up to 18% growth. We had a lot of supply constraints in the first quarter and half of the second quarter. So we should see this kind of 15-20% growth going forward into H2 for the rest of the world generics as well. The US generics as well, the H2 will be much stronger. We had 8 launches in this quarter, but generally what we do is we slowly ramp up our launches. So we will see a lot more momentum coming in Q3, Q4 of this year. So US should get back to a much healthier growth rather than the 6%. It should be closer to the 10-15% growth for the next couple of quarters. The only dampener in this, in terms of the top line, has been the API business, which pulled everything down, which degrew by 15%. There's some structural changes that have happened in the API business. We're seeing a lot more competition and pricing pressures in the API business, which has caused this. I expect another quarter or two to still last, and then we'll maybe with new launches recover that.
So just to summarize, is it fair to say that the India business, the domestic business, will see a mid-single-digit kind of a revenue growth? Exports should see double-digit, while API will clock in negative growth, perhaps in excess of 10%. Is this a realistic framework to work with for the full year?
So the India business our goal is to grow faster than the market, at whatever the market's growing at. Our goal is to grow faster than that. The first quarter, it's been at or below IPM, but we hope to grow faster than that in the next couple of quarters. So hopefully that should happen. And as regards the rest of the world generics, yes, about 15-20% is what we should grow that for the H2 of the year. US business as well, we'll see 10-15% growth in H2 of the year.
Okay, and API will be negative growth for the full year?
API, there's been some structural accounts that we've lost due to pricing pressure and increased competition from China and some other Indian companies. So that has caused this. I think as we go along, we'll see whether we want to recover those accounts or we want to get new ones. So I think another quarter or two, API will still be weak in terms of top line.
Okay, so the second half looks weaker in the API space. What does it mean for margins overall, Pranav? And in FY25, what are you targeting? And if things improve in FY26, will you see a better number on the top line and margins?
No, absolutely. And I think we have said in the investor communication that we do expect our margins, which are down to about 12%, 13%, to gradually inch up closer to the 18 to 20% in a couple of years' time. And that'll happen due to all the businesses moving forward.
You said on API, you're still deciding whether to, try and retrieve the clients that you lost due to pricing. So if you do drop your pricing, will it not hurt your margins? And if you don't, it takes some time to get new clients, right? So, I mean, how are you going to navigate this? What's the thought process? What are you veering towards?
No, it's a good question, right? And that's the main challenge that we face, because our API is a high quality, high margin business for us. We don't typically compete with the Chinese. We do try going at a more premium level in terms of better service, better quality. And so that's $1 million business for us. I think we'd like to keep our margins, but we will get top line growth. I think there are more opportunities as we go forward. And we should be able to recover on that as well.
So it's largely a pricing issue that we are getting from China, right? Because even I would say the chemicals industry is facing the same problem.
Yeah, similar, a little different, but similar. The other issue that we're seeing is there's a lot of data that is getting leaked out of India in terms of pricing and customer-wise, which is also creating a little bit of a havoc in the industry.
What's been the total loss in the API business due to pricing or the loss in customers?
I think.
Is there any other issue except this?
No, nothing. It's just pricing and okay. There's one.
So how many customers did you lose?
It's very tough to say. It grows across the board. I think it's a mixed bag. So 1 or 2 customers had FTA issues. So of course the offtake is lower right now because they had FTA issues. The other one, we have 2 large multinationals who just had a lower offtake, and the balance is about 5-6 customers, just large customers who there was a pricing issue.
Okay. Last question before we let you go. Is the company looking to participate in the GLP-1 opportunity, the 2 drugs there? Will you be participating in semaglutide and liraglutide?
So the GLP-1 is a very interesting area. As we're seeing, there's a lot of new indications. Liraglutide, no, we're a little late on liraglutide. Semaglutide, tirzepatide are something that we are pursuing. Semaglutide, we may be a little late for the US market, but we are still active on that. Apart from that, we do expect a lot more GLP-1s to come up. So we have built capability in terms of the peptides, the API manufacturing, as well as the formulation. And we will be investing quite a bit on GLP-1s as well.
Okay, all right. So we'll have a conversation about that separately. Thank you so much, Pranav, for joining in and giving us all those insights about what's happening with the company and the industry as well in general. That's Alembic Pharma. We'll wrap this conversation now and slip into a short break. As we do that, some exciting news for our viewers. Seize the opportunity to attend India's landmark economic summit. Show us you are a true CNBC-TV18 fan by answering a simple question in our Super Fan contest. Head over to CNBC-TV18 social media channels to participate and get a chance to win a free ticket to CNBC-TV18 Global Leadership Summit. Hurry, the contest ends on 10th of November. Answer now and you could be one of the 5 lucky winners.